Welcome back. You're still watching World Insight. Concerns continue to grow over the long-term economic damage from the virus COVID-19. The pandemic has dealt a severe hit to growth, with G20 leaders pledging to inject trillions into the economy. Now, talks over how to bring the economy back on track are under the spotlight. Will economic growth bounce back after the outbreak? What does it take in order to take that change? Earlier, I spoke to Jin Keyu, professor of economics at the London School of Economics and Political Science. Take a look at what she had to say. Now we are joined by Jin Keyu, a professor of economics at the London School of Economics and Political Science. Professor Jin, welcome to our program.
Delighted to be here.
It's good to hear from you and also know that finally you're back in China. Good to see you.
In quarantine, but that's the rules.
Hopefully we'll see each other soon. So let me start by asking you about the $5 trillion committed by leaders of the G20 economies. How likely it is going to solve the problem, and how big is the problem?
Well, without the $5 trillion, we are sure that the world economy would be in a much worse place. I have my doubts about the effectiveness of monetary policy, and am more enthusiastic about fiscal policy, especially well-targeted policies to help the households and help the businesses. This is not something that the monetary policy can do very effectively, because you can't force people to go back to work. And right now, the unemployment rate around the world is high precisely because of social distancing.
Yes, indeed. We see that spike in the United States over the past few weeks, unprecedented for decades. But is this going to be temporary, or is likely to be a very quote-unquote sustained process, which of course is a much bigger problem?
Well, it really all depends on how long this pandemic will force people to engage in social distancing. So it really depends on the virus. The virus sets the timeline. Different countries have taken very different approaches. So in China, they had a very dramatic and draconian lockdown. So the economy suffered heavily for more than a month, but now it's working its way back to normality. Now, other countries like the US, like many countries in Europe, are taking mitigation measures, which is only about delaying the peak to relieve some of the pressure on the health system. But that could also mean that this kind of social distancing and economic kind of paralysis can last much longer, maybe 6 months, maybe even longer. In that case, this is not just a temporary shock. This will lead to a very severe economic downturn.
Having said that, though, I've been reading some of your latest articles regarding the status of the world economy. Professor Jin, you talk about this is in comparison to the earlier big recession or Great Recession back in the 1930s. However, we also heard from some of the other experts who disputed about that opinion. Tell me more about what you think, Professor Jin.
Well, this is not really like the Great Recession of 2008. It's not a financial crisis. This is a direct hit to the real economy. Service sector as a share of GDP in the United States is 80%, and it's as high in other advanced economies. So even if you have half of that stopping in complete halt, that's 40% of GDP. And so it really depends on how long we think this episode will last, so that people can't go to restaurants and can't go to the movie theater. The restaurant business alone is close to $1 trillion business in the US. In the financial crisis, the banking crisis, the credit was frozen, and you can use monetary policy to jumpstart credit, jumpstart borrowing, and then people start to consume, and the economy goes back to normal. But like I said, monetary policy can't get people back to work, because it's the virus that is the hurdle. So it really all depends on, is this a 6-month thing? Is this a 2-month thing? In which case it's a mild crisis, or is it potentially even longer, in which case the economic downturn we see is potentially as large as the Great Depression. Although I believe and I'm confident that now the competence of the government is to stimulate and to ease credit, and so that can mitigate some of the longer term consequences that the Depression suffered from.
we have seen various governments taking different measures and approaches. For example, inside the United States, direct cash for American citizens. Some of the other economies also practice that. In China, it's more indirect in a way, try to benefit the businesses and go to the tax cuts and things like that, the cash flow. So, Professor Jin, how would you make comparison among all of these different approaches, and what do you think which likely to benefit China the most?
Well, first of all, I think that this time around, governments are not bailing out banks. They first of all have to bail out their people, the unemployed, and we saw the unemployment rate spike up sharply in the U.S. And then they have to bail out the businesses, and then indirectly the financial system if that comes into trouble. Now, China did not need to go through that degree and scope of bailouts and direct aid because, first of all, it was relatively short. Our economic industrial structure is a little bit different, where services counts a little bit less. Employment benefits and workers and savings, it's a different story from the typical American household. And so I think China's strategy of using massive fiscal, monetary, but very, very targeted credit policies to small and medium-sized business proved to be very helpful, because otherwise these businesses, most of them will go bust. These are different approaches, but they are intended to achieve similar outcomes.
Some of the sectors of the economy now, for example, online-related sectors are doing pretty well. Meanwhile, some of the real economy industries are also trying to go online ASAP as we speak. So will this trend be able to help us getting out of this very difficult time, at least temporarily? This enough to be able to boost the economy?
Online activities are, of course, a compensation to the halt and stop in the real economy, but it by no means, fulfills the gap. We're talking about face-to-face services, barbershops, cinemas, restaurants. Those are not online activities, and those are still the most dominant sectors. And countries vary by how much their activities are online. Now, it certainly has accelerated the trend to move a lot of activities online, but different countries are ill-prepared. In Britain, my friends and my colleagues' children are homeschooled. They don't have an online education system, especially the younger ones. In China, they moved that entire system within 10 days online for kids of all ages. And so it's very, very different across countries, but even in China, I'm sure it has spurred even more activities, even more engagement online, but that's still a small share of the overall GDP, so I wouldn't count on that alone.
What is your analysis of the future trend of change in terms of global supply chain? Now, China out of the fire, will it be back on track in terms of its original role in the global supply chain, Professor Jin?
I think this is actually an opportunity for China. It's an opportunity to also kill the decoupling theory that has been holding sway among the hawks. And the reason is that China right now is gaining back speed in terms of normal business activities, as well as logistics, production, and supply chains. It is the moment for China to guarantee to the world that it will not cut off key sources of exports, key parts, to service the world economy. It is China's opportunity, and I think that this is the intention of China to stabilize not only financial conditions in the world, but also global supply chains when the rest of the world much needs the help. I do, however, think that this pandemic may even accelerate the deglobalization and protectionist trends that we had already witnessed before the virus. But things could also move in a very different direction, where China really gains a lot of trust and becomes a really reliable contributor to global supply chains, as well as many other kind of leadership in the midst of this crisis.
Professor Jin, it's an interesting phenomenon, isn't it? When China was in the fire, in the middle of this pandemic, the rest of the world was looking for supply. Now, China is back in the court. However, the demand somewhat has gone, except a few sectors, for example, medical supplies and things like that. So there's always an imbalance between supply and demand. And how is China likely, according to your knowledge, work out this almost unresolvable question mark?
Well, first of all, I think what we are lacking in the world right now is a policy regulatory body. So trade will be hampered, but unnecessarily so. So even though world demand from a consumer's perspective is declining when China is just going up, there is this need and fundamental a demand for production supplies to continue further, but there's no regulatory body. But even inside China, the huge demand for business to continue operation and normalize still means that China needs to push ahead and restore all of its supply chain components. And we've heard recently from Korea and all parts of other world thanking China for guaranteeing the parts that they so critically need.
People are asking, how is this pandemic likely to transform what we already experiencing earlier than this? This is likely to be a huge impact, but nobody knows how long and to what extent. Professor Jin, reading from the signals and both of the economic realities and about the capabilities of leaders being able to work together to what degree as a result of the G20 virtual meeting earlier. Professor Jin, what is your assessment, at least for this moment?
Well, I think that this pandemic has realized that no matter how technologically advanced, how sophisticated the financial systems and interconnectedness our world has become, the world is still extremely fragile to just this one biological enemy. So I think that anti-fragility measures would be put up, rethinking of the whole system, not necessarily kind of discouraging globalization, but just more anti-fragility measures. I think that despite the fact that G20 leaders have come together, there is much more scope to work together. Think about developing countries. So long as developing countries do not contain and mitigate the virus, we cannot have open borders, because as soon as we have open borders, even if there are no new cases in China, no new cases in the US or the United Kingdom, as soon as you open borders to countries that still have the problem, it's going to become another problem.
Talking about the change of the economy, Professor Jin, some also argue, so it is the real economy that are being hurt right now. So why do we still put in so much cash and energy in order to save the stock market? You see that practice everywhere in the US, in some of the other major economies as well. So isn't this a very wrong logic?
Well, monetary policy at this point, the main goal is to ease credit, make sure that credit flows, that there's liquidity in the system. This way, businesses can borrow, they can still employ their workers, or at least give them the wages. And once credit is frozen, then we're really going to head towards the Great Depression era. So monetary policy is about having that liquidity in the system. Now, some of that will end up in the asset markets and stock markets, and that's just a byproduct. But also, stock market is also very important because it's about confidence. Once you have huge volatility, uncertainties, people become even less confident, and they are they're going to consume even less. And so maintaining the stability of the sentiment is also important, although that was not the main goal, the stock market. It was about really having credit in the system and avoiding a paralysis of the financial system.
Now, what would be the problems you worry the most, Professor Jin, before we wrap up today's discussion? From now until, let's just say, 2 months from now, what are some of the specific indicators you are going to read most closely?
Well, first of all, I worry about the large number of casualties that are the results of these mitigation policies pursued by industrialized Western countries. The delay in response and the less than severe social distancing measures can result in human lives being lost. That is not the ordinary financial crisis. Second, I worry about how long this will take for countries to be able to really contain or even just mitigate the virus to the point where the numbers are low enough that people can go back to work. And third of all, I'm mostly concerned about lots of lives and lots of problems in developing countries, and I don't think that there has been enough emphasis on having these leaders around the world help them battle this common enemy.
I'm afraid there are so many front lines they have to fight all at the same time, including fighting the fire at home and also see together how collectively things can be done. Professor Jin Keyu, a professor of economics at the London School of Economics and Political Science, really appreciate it. Thank you so much, and welcome back to China.
Thank you. Good to be here.
My interview with economist Jin Keyu. That's all the time we have for today. Tune in tomorrow as we will bring you our special program on COVID-19, The Frontline. You will hear experts' insights from China and the United States who are dealing with COVID-19 on the very front line, the current epicenter of COVID-19, the United States. To find out more, you can still visit our website, World Insight CGTN, and also find out our YouTube channel as well as Twitter and Facebook accounts. From Tianwei and everyone on the team, thanks for watching.